All right, folks, buckle up because tonight we're diving into the thrilling world of insurance. Yeah, I know, riveting stuff, but stay with me. Insurance is one of those things you hope you never need, but are really, really glad you have when disaster strikes. Think of it like this. Insurance is basically a safety net for life's unexpected curveballs. So how does this whole insurance thing work? Well, it's all about spreading risk, basically. A bunch of people chip in a little bit of money, that's your premium, to a big pot. Then if one of those people has something bad happen, like their house burns down or they crash their car, the insurance company uses the money from that big pot to help them out. Now, there are a ton of different types of insurance out there, from the basics like health and car insurance to the more obscure like alien abduction insurance. Yes, really. But no matter what type of insurance we're talking about, the basic principle is the same. You pay a little bit now, so you don't have to pay a lot. Potentially a whole heck of a lot later. Now let's talk about the two main flavors of insurance, public and private. It's like choosing between vanilla and chocolate ice cream. Both are good, but they serve different purposes. Private insurance is what most of us think of when we hear the word insurance. It's offered by private companies and you usually have to pay for it yourself. This is your car insurance, your homeowner's insurance, your pet insurance, all that jazz. On the other side of the ring, we have government insurance, also known as social insurance. This is insurance that's run by the government and funded by, you guessed it, taxes. Think Social Security, Medicare, and Medicaid. These programs are designed to provide a safety net for everyone, regardless of their ability to pay. Let's dive a little deeper into the world of private insurance, specifically commercial insurance. This type of insurance is all about protecting businesses from financial ruin. We're talking property insurance, liability insurance, workers' compensation insurance, basically anything a business might need to protect itself from the unexpected. Now, within the world of commercial insurance, we've got two main players: stock companies and mutual companies. Stock companies are owned by, you guessed it, stockholders. These companies are in the business of making a profit, and they do that by selling insurance policies. Mutual companies, on the other hand, are owned by their policyholders. That means that when you buy insurance from a mutual company, you're actually becoming a part owner of the company. It's like a co-op, but for insurance. Now let's hop over to the other side of the aisle and talk about government insurance, aka social insurance. These programs are designed to provide a safety net for everyone, regardless of their ability to pay. One of the biggest and most well-known social insurance programs is Social Security. This program provides retirement, disability, and survivor benefits to millions of Americans. Basically, it's designed to make sure that you have some income coming in when you're too old to work, if you become disabled, or if you die and leave behind dependents. Then there's Medicare, which provides health insurance to people aged 65 and older. This program helps cover the costs of hospital stays, doctor's visits, prescription drugs, and other medical expenses. And finally, we have Medicaid, which provides health insurance to low-income individuals and families. This program is a lifeline for millions of Americans who wouldn't be able to afford health insurance otherwise. Section 5, beyond the big two niche insurance players. Now we've talked about the big dogs of the insurance world, commercial insurers and government programs, but there are a few other smaller players in the game that are worth mentioning. First up, we've got fraternal benefit societies. These are non-profit organizations that offer insurance to their members. Think of them like the insurance equivalent of a fraternity or sorority. Then there are risk retention groups, which are groups of businesses that come together to form their own insurance companies. This allows them to pool their resources and get better rates on insurance than they could get on their own. And finally, we have captive insurers, which are insurance companies that are owned by a single company or group of companies. These insurers are typically used to insure the risks of their parent companies. Section 6. Reinsurance, insurance for insurance companies. You know how we said insurance is all about spreading risk? Well, it turns out that even insurance companies need insurance sometimes. That's where reinsurance comes in. Reinsurance is basically insurance for insurance companies. It allows insurance companies to transfer some of their risk to another insurance company called a reinsurer. This helps to protect insurance companies from going bankrupt if they have to pay out a large number of claims all at once. Think of it like this. Let's say you're an insurance company that insures a bunch of houses in Florida. You know that there's a risk of hurricanes, and if a big one hits, you could be on the hook for billions of dollars in damages. That's where reinsurance comes in. You can buy reinsurance to cover yourself in case of a major hurricane. That way, if the worst happens, you'll have someone to share the financial burden with. Section 7. When coverage gets tricky, surplus lines insurance. Sometimes you need insurance, but finding a company willing to take on the risk is like finding a parking spot in Times Square. Nearly impossible. That's where surplus lines insurance comes in. This type of insurance is for those hard-to-place risks that traditional insurers shy away from. Think insuring a rare piece of art, a celebrity's voice, or a company operating in a high-risk industry. Basically, if it's unusual, unique, or just plain risky, surplus lines insurers are the ones who might be willing to take a gamble. These insurers aren't your run-of-the-mill insurance companies. They're often not subject to the same regulations as traditional insurers, giving them more flexibility in the policies they offer and the premiums they charge. It's a bit of a wild west out there in the surplus lines market, but sometimes it's the only option for getting the coverage you need. Section 8. Lloyd's of London and Industrial Insurers. A quick look. Now, let's take a quick jaunt across the pond to talk about Lloyd's of London. No, it's not just a place to buy fancy hats, although you can probably find some of those there too. Lloyd's is actually a marketplace where individuals and companies can come together to insure unusual risks. Think of it like eBay, but for insurance. Instead of bidding on vintage Beanie Babies, you're bidding on insurance for things like satellites, oil rigs, and even movie productions. It's a fascinating and historic institution that's been around for centuries. Back on this side of the pond, we have industrial insurers, which are companies that sell insurance directly to businesses. These insurers often have specialized knowledge and expertise in specific industries, which allows them to provide tailored insurance solutions to their clients. Section 9. Authorized or not, where insurers hang their hats. Finally, let's wrap things up with a quick word about how insurance companies are authorized and classified by domicile. Now, domicile might sound like a fancy word, but it simply refers to where an insurance company is headquartered and authorized to do business. Insurance companies can be either domestic, foreign, or alien. Domestic insurers are those that are headquartered and licensed in a particular state. Foreign insurers are headquartered in one state but licensed to do business in other states. And alien insurers are those that are headquartered and licensed outside of the United States. Why does this matter? Well, it can affect things like the regulations an insurer has to follow, the taxes they pay, and the types of policies they can offer. So, the next time you're shopping for insurance, take a peek at the company's domicile. You might just learn something interesting, and there you have it, folks, a crash course in the wonderful world of insurance. Now, if you'll excuse me, I'm off to go renew my alien abduction insurance, just in case.